Most successful people that I see have people around them to give them a different perspective than their own.
Can you help us to understand from your experience, what are those things that business people commonly either get wrong or don't pay attention to?
When we drive a car, we spend most of our time looking in the forward direction to navigate from point A to point B. And the side mirrors and the rear view mirror, they're important. They are. We need them. But most of the action is through the front windscreen. So if you go back to the numbers conversation, is a business owner using the rear view exclusively, or is there a combination of rear view and forward view?
The numbers are actually an output, aren't they?
They are.
They tell a story.
Yeah. It's a scorecard.
Yeah.
Yep, we're at half time. Who kicked the most goals? How many points have we got? And how far in front or behind are we?
So what would be, let's say, the top 5 things that you would say business owners are not doing well when it comes to numbers? Welcome to 2026, and for those in business, I really wanted to give you a kickstart, and I thought to myself it'd be great to invite Greg from our CFO to talk about profit and loss, cash flow, balance sheet to get us set up, because we're both kind of numbers guys. And as this conversation evolved, we kept coming back to people and attitudes, because the numbers are really an output. They're not the be-all and end-all. They're not the start, although they are important. I think you're going to get a lot of value out of this conversation. Come and join us and have a listen to Greg.
And so what I'm very interested in is what is actually the truth. And even if the truth is uncomfortable and it's hurtful or confronting or scary, it's the truth that allows us to move forward effectively, and lying does not. And so here we are.
So I'm going to use that as a wonderful segue to talking about the numbers in business.
Numbers in business, the truth. Yeah.
You know, so here's an interesting observation. I think for both of us, I get the sense we like the numbers because, you know, the numbers don't lie. The stories we weave around the numbers definitely lie.
Yep.
So if you're able to have a bunch of numbers in the business, the numbers are the numbers, I think the art of making decisions around those numbers is your interpretation.
Yes.
And if you value understanding what they really mean rather than what you want them to mean, can be the distinction between whether you're successful or not in your decision making. What do you think about that?
100%. That you could not have hit the nail any harder on the head. And when we say numbers don't lie, we're assuming that the numbers are actually correct, and that in itself is a big problem.
Yep.
And so if we're creating a narrative around the numbers and the numbers are actually not right, well then that's an additional issue that needs to be worked through. And in my experience in working with businesses over the last 35 years, most businesses' numbers are telling them porky pies.
Yep.
And there's only ever been I've probably worked with hundreds of businesses over that 35-year period. And especially in the last 20 odd years doing the work that I'm doing now, there's only ever been one client when I've not had to significantly rearrange their numbers to provide truth and a better representation of the business and where it's at. So that's usually the step number one. And then step number two then is back to what you're saying about the truth in the numbers, is the interpretation of those numbers and what it actually means. And so if you look at all the different personality types, we've got the eternal optimists and we've got the eternal pessimists, and on that spectrum we all fit on that spectrum somewhere. And in my view, the true leadership is about calling an issue for what it is, not over-dramatizing it, not sweeping it under the carpet, but just calling it for what it is. That, to me, is real leadership, and that is not necessarily an easy skill to acquire. Critical thinking, independent thought, getting other people's opinions, making sure that there's multiple sources of information and viewpoints, and then being able to work through that and make your own mind up as to what it all means. And in working with business owners, I've got to navigate their personality type more than anything else.
It's an interesting thing working with people, isn't it? I often say to people, I spend, I reckon, 50% of my time managing the emotions of my clients.
Yep.
It's not about the numbers. It's not about the analysis or even the strategy or the implementation. I reckon we're pretty good at that.
Yep.
It's the people. And I do love them. That's why I do it, actually, because if it was just a numbers thing, I'd get bored.
Yeah.
But the people do keep it interesting.
They do.
And they don't have those emotions for no reason. You know, there's a motivation or there's a problem. Oftentimes it's a problem of some sort, or an anxiety. It's a very human thing. I think I actually do enjoy that 50%. It's probably why I do it. But it's that 50% that can also get people into trouble and leads to the misinterpretation of what the numbers are telling them for a lot of reasons. So I've been looking forward to this conversation so much. I'm glad we could share it, because it's the beginning of 2026. For all intents and purposes, the economics that I read tell me in WA, we're going to have a pretty good year, generally. There are a few industries that will struggle, and there's some nuances, we won't get into those. But generally speaking, 2026 in WA should be a very, very good business year. Yep. And being a bunch of humans, myself included, once you get running, you're in the forest. And if you don't plan what you want to get out of 2026 well enough or at all, it'll be gone in a blink of an eye.
It will.
And you may have lost the opportunity. And that would just be a shame. So what I was advocating for in 2026 is, if you own a business, take the time out to sit down and plan. And what I mean by that is, don't just have, I want to do this, this and this. It's an exercise of actually critically thinking. You've got to take some time. Well, I'd say invest some time to do it and understand and critically plan how you want to execute, what you should do and what you shouldn't do. Everyone, I think, knows what they should do. They don't take the time to ask themselves, well, what shouldn't I do? What am I excluding? We're actually going to do an episode just on the planning, so I'll leave that alone. You own our CFO, and I know you've got wonderful insights into numbers and businesses and how to operate them successfully. That's your game, isn't it?
It is, yeah.
Can you help us to understand, from your experience, what are those things that business people commonly either get wrong or don't pay attention to? Maybe we can start there.
Yeah, it's a great question, actually. And given that we are all imperfect and we kind of flawed, really, as human beings, and that's okay. And the most successful people that I see have people around them to give them a different perspective than their own. And my first experience with that was in my first commercial role many years ago. I did a 2-year contract with a large successful family business, a fuel distributorship out of Geraldton. And the owner of that business didn't say much. He was a man of very few words, but incredibly successful, fantastic business. And one of the things that I noticed about him was that he clearly listened more than he spoke. And I just thought initially that he was quiet. He was just a quiet guy. But how does a quiet guy run and grow a super successful business? He employed around, at the time I was working for him, it was around 600 people. And one of the things that I noticed about him was that when he needed to make a key decision around the business, he would call in his senior management team and describe the issue and then ask for opinions. And he'd have all of us in the room. That there could be anywhere between 6 and 10 people in the room at any one time. And he'd go around the table and say, "What do you think? What are your thoughts on this?" And he'd go around the room, and then he would say, "Thanks, I really appreciate your time, and I'll let you know where I land on this decision." And so it was clear that once I'd been to several of those meetings, and after I'd first started with him, that was his way and his approach of running his business. And it was fantastic in the sense that we all got to contribute. Just as a side note, in terms of getting people fired up on the team, there's nothing better than your boss coming to you and say, I'd love to have your opinion on this issue. Can we sit down and have a chat? I mean, it's just great. And so I love that. So he was a smart guy, very quiet guy, and was a listener, and was very interested in other people's views and thoughts and opinions and sought them out. And so I've seen that. And then I've had other experiences that are at the complete opposite end of that spectrum, where they just do not listen to anybody. And I had this experience. I was living in Geraldton at the time, and I was asked to provide a valuation for a bottle shop, a small business. And I looked at the numbers, and they were not good at all. Like, that was just diabolical. I mean, it was just a mess. And so I had to deliver some pretty bad news, and he was burnt out, and he was stressed, and he just wanted out. And when I gave him the bad news, the expletives that followed and the way that I was marched out of his premises, and the comments that he made about where I got my qualifications from. He's like, "Where'd you get your qualifications from? Was it out of a Wheaties packet or something?" And so he was really just down on me big time, and expressive about that, and red in his face. And so you look at that, and so clearly he was not a great listener, and wasn't that interested in the truth and other people's views and perspectives outside of his own. And then I see somebody else at the other end of the spectrum, and their level of success or not seemed to be directly correlated to their ability to listen and seek out perspectives other than their own. So I think that's one of the key traits of a great business person, is that they don't have all the answers, but they have the right questions. They ask the right questions. And in a financial sense, so that's what I observe in a general sense. But
can I add a little flavour to that?
Yeah.
Because I'm of that school of thought, ask others, especially if they're on the coalface, because they'll know different things. I've learnt to validate. I've heard you, Greg. That's fantastic. Thank you for that. And I might think to myself, what if he's right? What if he's wrong? How do I know? So I'll find my own way to quietly validate what Greg's saying. Because if he's right, that's really important. But I try and look for the data that will either validate or invalidate what he says.
And which is a great approach. That's the approach of the because he was asking lots of people. He would ask his internal team, and he had external advisors. He had his team, both internal and external, that he would lean on from time to time, and it was clear that worked for him very well. And the other benefit there, as I alluded to a little bit earlier, is when somebody that employs you is interested in your opinion, that is so energizing in that you get to contribute to their thinking. And so if you're doing that with your people inside of your business, you're going to give them a lot of energy to carry the business forward. And let them do the heavy lifting. And I think some business owners have played the sort of the martyr role where it's, I've got to do all the heavy lifting. It's all me that has to do that. And so they're creating a business that relies completely on them as opposed to a structure that moves the business forward. And as a business leader or a business owner, our job, if you say the CEO, the Chief Energy Officer, is responsible for creating the energy in the business. And if you're creating negative energy, that will have a negative impact, to make an understatement, and positive energy and so on. So getting a view outside of your own perspective, energizing the people in your business and giving them the freedom also, this is the other, I think, a very, very important point, giving them the freedom to make mistakes. And we don't want them to make the same mistakes over and over. That's not cool. But we also want people to push a little bit harder and take a few risks. And if we're completely risk averse, well, then nothing really happens. We're just sort of doing the same thing. I'm not going to step outside of what I normally do because that's uncomfortable. Therefore, I'll just keep doing what I'm doing. But hey, I'm expecting different results. And that doesn't work.
That in my experience with businesses, that speaks to a business where people aren't taking responsibility and there's an apparent lack of accountability. But you ask the reason why, and sometimes people are so scared to do what they know they should do that they don't do anything. So it's characterised as, nobody takes responsibility around here and there's no accountability.
Yeah.
And the people may want to be responsible and accountable, but the culture isn't allowing them to be that way.
No. And culture. I mean, it is all about the culture. And as much as I'd love to say that it's all about the numbers, it's not.
The numbers are actually an output, aren't they?
They are.
They tell a story.
Yeah. It's a scorecard.
Yeah.
We're at halftime. Who kicked the most goals? How many points have we got? And how far in front or behind are we? For me, culture is I would say number one. And that goes back to a business leader setting the energy. And then just having the right questions, being better at asking questions than making statements, and being a great listener. And then empowering people to give them the freedom and the space to do their work and not get in the way.
Yeah, isn't it interesting how I think we would be labelled, I don't know if it's true, we would be labelled as numbers guys, but what are the numbers guys talking about? Soft skills.
Yeah, totally.
We actually haven't even got to the numbers yet. We're talking about energy and culture, and I think I've become a little averse to using the word culture. I use it because people understand. Well, they understand a feeling of what it means. I think it's misinterpreted and misused. I think I prefer to call it attitude. Because if I would liken a culture to a bunch of attitudes, and it's the attitudes of your people, the leader, who's a reflection often of the attitudes of the people, and the attitudes of the people is what will attract clients and keep them or not. Because if I like you and you got a great attitude and you can solve my problem and you're helping me, I'm going to spend my money with you.
Totally.
Like, it's not that hard conceptually. I've got, obviously, the product's got to be good, but that's all it is. So you go, is it really that mind-boggling? Well, no, not really. Now, where the numbers come in, you've got to have your formulas right to be able to then say, okay, if we do this and here's the way we charge and here's the expenses, blah, 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 here's the output, which we'll get to. But it doesn't start with the numbers, does it?
No.
Well, we might model on numbers to say, is this business idea viable? But once we establish it, that'll work, it's all attitude.
Yep. Yeah, I heard a phrase once, your attitude will determine your altitude. Yeah, for a cliche, but we'll throw them in.
Oh, yeah. So we seem to be in agreement. Attitude rules the day. So if you want a good 26, have a look at your attitude to start with before you look at the numbers. Can we talk to the numbers though?
Yeah.
Now, because we're numbers people. And I think business people invariably, there'll be a bunch of people who understand the numbers and want to anchor around what does that really mean, even if I don't like what it means. Allows me to make a decision and pivot the business a little bit. There are others who'll see the numbers and understand them but want to wrap their own story around it because it's more comfortable and palatable.
Yes.
But it leads to poor decisions and then, of course, profit goes down. And there's the people who are actually really good at what they do, stellar attitude. They're just not. I don't know what a balance sheet is. It's boring. I don't even want to understand it. I know, yeah, okay, I should. I get it. And the profit and loss, is there a profit number there? Good, that must be good. I'm not even interested in it. I know I should be, but there's those people. I do love them because I love their attitude. Because the other stuff, we can fix it. Or we can teach you at a minimum level what you should be watching. And you can hire people to do the rest of it.
Yep.
Can't hire people to do your attitude.
No.
So that's why I love them so much. Okay, we can solve that problem. Don't worry about it. But let's identify it's a problem. There's 3 groups there for me. What have you seen? What are you seeing? Where are the good bits, the bad bits?
In relation to the numbers or more around the attitude?
I think in relation to the numbers around those 3 groups, because the guys that really understand it and ground themselves on the truth of what does that number really mean? Where did it come from? How does that impact me? How does that impact the business? Those people tend to make decisions that give them a stronger bottom line or navigate the business into a stronger pathway. The people that wrap their stories around what the numbers mean because it makes them feel more comfortable or less scared tend not to fare so well. And I know you've seen all of them.
Yeah, we see it at again, if we think about a spectrum, and there's all kinds of people that sit in all different places on a spectrum. The first thing I would say is that there have been a lot of businesses that have been super successful that don't have great financial systems. And I see that a lot. And sometimes when we're pitching our services, it's like, well, I've already had a bunch of success. Why would I use you? And that's a great question. If we look at the life cycle of a business and the journey of a business, and depending on what its strategy is and where they want to go, you can survive to a certain extent without great financial systems. It will get to a point, depending again on strategy, where the numbers are critical. You do have to know. You've got to have good numbers to be able to make effective decisions. And broadly speaking, the numbers are either referencing the past or the future. And if you think about us as human beings, we're either talking about the past or the future. And so in my mind, it's how do we stay present to what's actually happening today so that we understand what's happening today? And then in a numbers sense, how good are your historical numbers in terms of integrity, in design, what they're presenting, how they're formulated? And then similarly, in a forecast or a forward view sense, what the future looks like. What kind of forward view do you have in a numerical sense? And I often use the driving a motor vehicle analogy in that when we drive a car, we spend most of our time looking in the forward direction to navigate from point A to point B. And the side mirrors and the rear view mirror, they're important. They are. We need them. But most of the action is through the front windscreen. So if you go back to the numbers conversation, is a business owner using the rear view exclusively, or is there a combination of rear view and forward view? And with technology these days and being proactive in the way that you think about things, I mean, they're available to us now. That is very possible, and we do a lot of work in that space. So there's that context around the numbers, and then we get to the people part. And most people, what I find with entrepreneurs, the ones that are owning the businesses, they're more kind of front of house kind of people. They're the more extroverted, the more colourful, the more expressive, the more energetic, the more people-focused that they are, and generally they have more of a visual way of receiving information and making decisions. And so given that's the case, they're less likely to look at a spreadsheet or a whole bunch of numbers and get engaged in that process. And so my responsibility, you said, one of your jobs is to manage the emotions of people. One of my jobs is to understand their decision-making style and their personality type so that I can flex my communication to make sure the communication is effective. So it goes back to the soft skills again. And we as a business have put an immense amount of effort into designing dashboards and data that will appeal to different learning styles. Detail-oriented, high-level oriented, visually oriented. And they're all, we run into all those people. But a lot of business owners are the more expressive and the more, as I mentioned, the front of house kind of people. They're more visual. And so if I put a lot of detail in front of them, the eyes are going to glaze over and they lose interest very fast, and then the value's lost and they're not paying attention. So I think us as finance people, whether we like it or not, we need those soft skills to get people engaged. And regardless of their personality type and what we see and where they land and where they are in their emotional state and their mental state, it's still our responsibility, if we choose to work with them, to be able to influence in an effective way, regardless of their. So if we've had clients where they've engaged us maybe to tick a box and they're actually not that interested in getting to the truth. And then we've had clients, there's a client that we've just taken on recently, and their level of enthusiasm for getting this part of their business right is off the charts. We haven't experienced this level of enthusiasm before, and they're just an absolute pleasure to deal with. They're just hungry to learn and understand and develop themselves they've recognised that they need to develop themselves to develop their business. And it's a joy.
That's gold, isn't it?
Oh, it's fantastic. You wake up in the morning and go, I'm meeting with those guys today, and I'm looking forward to that. Because you can really add value, and you can see the body language in when they receive that information.
So what would be, let's say, the top 5 things that you would say business owners are not doing well when it comes to numbers?
They don't have a forward view. That would be number one. But it actually, let's not in any necessary order. First issue is the accuracy, completeness, and timeliness of the data. That's a big, big issue. That's the number one problem. Second problem is the design of their data. So if we think about a chart of accounts in an accounting sense, how that is structured and how it's designed, more often than not, does not reflect the commercial dynamic of the business. So it's set up to deal with compliance issues. Get my tax returns done, get my business activity statements lodged on time. That's the focus. But the accounting data doesn't really offer any commercial information in the way that it's structured. So accuracy, timeliness, and completeness is right up there. Data design is right up there. And then, as I mentioned a bit earlier, it's that forward view. So they've got historical data, whether it's good, bad, ugly, or otherwise, historical data focused, and no or very little focus on what the forward view looks like. And then to round out the top 5, so we've got 3 in there. So being process driven, so the way that people pay attention to their numbers is often ad hoc. So if your business owner's got cash flow issues, I need to pay attention to my numbers. And if they don't have cash flow issues, well then it's, everything's great. I've got a bit of cash in the bank, doesn't matter. I don't have time to look at my P&L and cash flow statements and management reports. I'll just keep powering on. So no real process, no consistent process. And then to round out the top 5, I would say I believe it's important to share numbers with the key decision makers within a business. So if they have some kind of influence, so take accounts receivable, for example, and if a person or persons are responsible for making sure that they're collecting cash, then what kind of accountability and transparency and support do we provide those people to do their job effectively? So a lot of business owners will be very secretive around their numbers and not share any information. So the team doesn't actually know how they're going. Are we doing well? And the team want to know. They want to know if they're doing well or not. And so sharing information I think is a big problem as well. And for example, in my own business, my data file, my Xero data file is available to the whole team. Everyone's got access to it. Every single person can go in and have a look at the data if they want to. And that may need to change, but that's where it stands at the moment. So I don't mind them seeing, sometimes the numbers might scare them. Because like everybody, we have ups and downs and challenges and all kinds of things. And sometimes the numbers might go, well, we're doing great. Or we're not doing great. But I'm a believer in the truth, whether it hurts or whether it's confronting or not. We all need to understand what the truth is. So I believe that sharing the right information with the right people within the organisation is a very good idea, and that often is not the case with a lot of businesses.
I agree with you. I'll share a slightly altered view. I'm not a believer in sharing everything. So none of my staff have access to our Xero file, and I purposely do that. And the reason I do that is I'm not averse to sharing. I won't share everything, but I'm not averse to sharing things that affect what you do. So if you are in accounts receivable, absolutely you should have data, access to that data, because then how do you know you're doing well or not without me having to tell you? And I shouldn't need to tell you. You should be the master of that destiny.
Yes.
So I say to my people, I need you to be the expert in that. You've got to be so far ahead of me, it's not even funny. I'm asking you for advice. And that means all of these things. And here's how we measure your success. It's a people thing.
Yes,
Again,
it is,
coming back to the people thing, right?
It is.
Can we talk about your second thing, which is around the setup of your data? Because I think that's not well understood. What does that even mean? And if you're not a numbers person, it's meaningless.
Yeah.
You don't even look at your P&L or cash flow statement anyway to know what those headings are and how it's organised. Because you're talking about, if I've heard you correctly, the accuracy of the numbers in the first place, understanding where they come from to say, I validate where those numbers are coming from. I've agreed to put them in a particular place. And because I put them in a particular place, means the information I can get from it can better guide my decisions because it's actually meaningful for the business. It tells me something about the business itself. Is that kind of on the mark?
Yeah, it was that is part of it. But even before we get to that, it's the data design. So you could have data that is well reconciled, that is timely, that is accurate, but if the design of that data is not right, it's still not going to offer you much in the way of insights into the business.
So what do you mean by design then?
So if you think about a chart of accounts, so we've got, broadly speaking, revenue, costs, direct costs, overhead costs. They're the three main groups of dynamic on a P&L. And what we often see is no split between those costs that are directly related to revenue and those costs that are not. And there's a saying that we've adopted at our CFO, and that is revenue is vanity, margin is sanity, cash flow is king. And so what that means is that if you don't have a margin on your product or your services, you don't have a sustainable business. And if you're not splitting your data between those two groups, between those costs that are directly associated with your ability to raise an invoice or a sale and those costs that are not, you are not measuring your margins. And if we agree and accept that revenue is vanity, margin is sanity, cash flow is king, if you're not measuring it, you're not managing it. If you're not measuring it, there's no strategy around it, therefore you're leaving it to chance. And so one of the first things that we will do when we engage with a new client is we check their data design. It's just part of the process because we know that there's a 99.9% chance that the data design is going to be incorrect or not even thought of. And so the way that we do that is we look at their pricing methodologies. So if they sell a service, tell me how you price your service and what are the costs that go into delivering that service. And so we review that at a deep level to understand it intimately. And then we compare. So there's your sale price. There are the costs that are involved in delivering the service. And here's your dollar margin that you're expecting. And then I look at their accounting data and see if I can make an apples for apples comparison. And if I can't, then that triggers a redesign of their chart of accounts so that we can make that apples for apples comparison. So your accounting data, if it's done well, should be your central source of truth. And then you can then look at your accounting data and compare that to what you think you should be doing in terms of margins, and that will tell a story.
I think we label it differently, but I understand what you're talking about. We do that internally, even with client accounts if we're doing finance, because oftentimes what I see is a P&L with a revenue line, cost of goods sold, and there's nothing there.
Yes.
Right, and everything's below the line. I go,
correct.
How do you even know what the cost of delivering your service is?
That's exactly what happens.
Just to start, I love your saying. Because margins are, people talk to me about revenue. I don't care what the revenue is. How much money did you make?
Yeah.
Get rid of the jargon. How much money did you make? That's the only thing that matters. How much cash is in the bank? I love cash is king. I don't think that's well understood. Can we talk about the difference between a profit and loss statement and a cash flow statement?
Yeah.
I know it's really basic, but I don't think it's accepted well.
Well, it is basic in a way, and there are definitely complexities. And again, it depends on the industry and the business model and where they're at. And there's five cash flow items, what I call cash flow items, and these items do not sit in the P&L. So there's a method around calculating your net profit and constructing a profit and loss report. And then outside of that, there's another 5 areas that we have to cover off before we get to see extra cash in the bank. And that is working capital, paying back the bank if you have debt, paying your income tax, capital expenditure, so buying desks, chairs, computers and toolboxes and whatever else, and then paying a dividend or taking drawings out of the business. So they're the 5 items. So what happens is you have your profit number, and then from that profit number, you've got to deduct those additional 5 items to work out what your net cash position or your net cash movement is going to be. And if we just go back to the conversation around working capital just for a moment, I think the other 4 are pretty straightforward. But around working capital, that's often misunderstood. What is working capital and why is it a cash flow issue? And if you think about it like this, when you start working for a customer or a client, there's going to be a time period between when you start incurring cost to deliver a service to when you actually get paid. And depending on the industry, the business model, the way that the business is managed, that time period could be anywhere from 1 day to 180 days. Depends on the business. And so you need to pay, or a business will need to pay for costs, for labour, for overhead costs, for direct costs, and all these kind of costs until you get to the point where the customer is ready to pay you for service delivered. And there is a time lag between start and finish. And that's essentially what working capital is. It's the funding the business until I get paid, or funding the service until I get paid from the customer or the client. And as the business grows, so as its revenue grows, its requirement for working capital will grow with it. And I've seen many, many businesses where they go, yeah, we're on a growth strategy, and off they go, and immediately strike cash flow issues. Wow, my top line's growing and my bottom line's growing and everything seems to be fine on the P&L. However, I've got no cash. Why? And that's the difference between the two.
Yeah, we see that all the time. Obviously, we do working capital loans, but yeah, businesses, I think they get excited about the growth, and I love it.
Yeah.
And they go, yeah, we're making more money. They don't recognise it comes with a working capital problem, and it's better to solve it before you have it, obviously, if you're aware. How many times, Greg, have you heard a business owner say, Greg, I'm making all this profit. Here's my profit and loss, but I've got no cash.
Every day of the week. In fact, it was one of the key reasons why I chose to go on the journey that I did. It was one of the main reasons. And so in my earlier days, I was a tax accountant for about 15 years. And the number one question, so I would be sitting there saying, well done, you've had a great year. You made $1 million last year net. And then before I could say anything else, the client's jaw would hit the desk. They'd look at me in disbelief and say, well, I don't have $1 million in the bank. I don't trust your numbers. And I don't trust your numbers. And now you're telling me that I've got to pay tax on those numbers that I don't trust. I'm not a happy camper. And at the time when I was working in Geraldton as a junior accountant, tax accountant, I was doing the books for fishermen, salt of the earth kind of people, farmers, salt of the earth kind of people, tradies, miners, all those kind of people. And the expletives and the shoes and the handbags and everything else that would be thrown at me because I just could not explain that equation confidently put a lot of doubt in the client's mind that, well, your numbers are rubbish and now I've got to pay all this tax. So that was, as a tax accounting firm, you don't really focus on that kind of stuff. It's like, I've got to get your compliance sorted and there's no explanation of the numbers. And I found that very frustrating. And I got to my mid-30s, 14 or 15 years into a tax accounting career, and it just wasn't for me. And that was an inflection point where I decided that I had to do something different. And as I said, it was driven by several things, but that was one of them, where I just wanted to be able to help people genuinely get on top of their cash flow and contributing to the success of their business, and not just being focused on compliance and complying with government regulation. And so that's a big issue, and most people still don't understand it, that equation.
Yeah, I don't think we get any education around it. I don't criticise anybody at all for not knowing. We're never taught those things, and I think they're just misunderstood. So I'm glad you're around. I also see it every day. We help clients with cash flow forecasts, and the looks of puzzlement I get when we sit down and talk with them about it, because it allows for simple things like tax. BAS. I've got a stream of new clients that come to me, even now, with ATO tax debt.
Yeah.
Okay, how did that even happen? Oh, but we're making lots of profit. I had a conversation yesterday like this. He said, oh, yeah, but I'm making $5 million profit. Okay, I don't think so. Well, let's sit down and have a conversation about this. You've got a really large ATO debt and your money's gone somewhere. I think his profit's around that on the P&L. I go, where's the money? Well, he's owed a lot of money. So where is your cash?
Yep, working capital issues.
Yep, he's growing. So he's paid for a lot of stuff, paid for a lot of labour. That money's not coming yet. People owe him a lot of money and have done for more than 90 days. So he's become everyone else's bank. They've got his money. He might not get it back. He hasn't had the cash to be able to pay his tax debt. That's common, right?
It is. And so if we go back to the earlier comments that I was making around different personality types and the visual way that people often receive and interpret information, with that frustration that I had around that very issue that we're talking about now, I designed a visual communication and education system to help people understand that equation. And it's not just about helping them understand, it's helping them to understand so that they know what we are talking about so that we can make decisions about it. We can measure it, we can manage it, we can strategize it. And so when people see that visual training, you just see the penny dropping, like this clunk, clunk, clunk. You can hear it from a mile away. And I've had people say all kinds of things. Why didn't somebody tell me that 15 years ago? It would have saved me a lot of hair and grey or stress or waking up at 2 or 3 o'clock in the morning not knowing how I'm going to pay payroll tomorrow. And I did a presentation just yesterday, actually, to a local business coach, and he was like, "I've never seen anything like this before. I've been looking for years, for 10, 20 years, for a way of communicating this to people, and you've just blown me straight out of the water. Like, this is incredible. And I want to get involved and I want to get my clients in. So he was just super excited about, someone's solved this problem of being able to communicate this difference between profit and cash. And what I find is that once people see it, it just, like I said, the penny drops.
Yeah, they're smart. It's not about whether you're smart or not.
No,
it's not. It's just something.
It's not the question.
I think you're right. It's communication. It's something that's not well understood, and for whatever reason, hasn't been well communicated. But once you see it, they should probably just come and talk to you and have a look. Once they see it, they go, oh yeah, I get it, and it changes their whole outlook and the way they make decisions, doesn't it?
Incredibly so, and I've run that just as an experiment. I've run it for more corporate level style people. So I've had the opportunity to meet people that have worked at tier 1 level in the corporate scene, and I've tested their knowledge around it as well. And they can't explain the equation effectively and succinctly. I presented that very information to a round table of CFOs, and before I gave them the secret sauce, I just out of curiosity here, can you explain the difference between profit and cash in less than 25 words? And the room was dead silent. A room of CFOs. And again, we're not blaming them. I'm not sort of trying to shoot anybody. But it's the method of teaching and the method of education just hasn't been there. You can go and get a textbook, a university textbook, and that will tell you nothing because it's all just traditional financial reporting, statutory reporting, accounting standards and they're important. I'm not dissing them at all. And that's their compliance issues. Compliance is important. I get it. We have to comply. Our modus operandi is education, understanding the truth, helping people understand the dynamic of their business, helping them make the right kind of decisions, helping them create strategy around cash flow. How do we ensure that our cash flow is optimized and we are cash flow positive as much as we possibly can be? It's the strategic element, not the compliance element. And accounting firms are traditionally focused on compliance. And again, it's not a criticism, it's just an observation. I mean, I was in it for 15 years. I know it well. And it's hard being a tax accountant. Like, it really is. The Tax Act is 10,000 pages long. It constantly changes. There's no logic involved in tax. It's all just treasury stuff, to raise revenue for the government. Again, I get that's important. But the focus is around compliance. It was never around education in the accounting profession. And that's where I saw a massive opportunity. I thought, wow, if I could help people genuinely in this way, imagine the impact that we could have. We know that small and medium-sized businesses is the engine room of the Australian economy. It's the largest employer of all the industry demographics. So if we had a super strong small and medium-sized business community or environment, that is going to contribute to a country that is strong and resourceful, innovative and successful.
It's better for everyone, isn't it?
Better for everybody. Better for people that are employed by those businesses. Better for the families that run those businesses. It's the entrepreneurs of the world that create, in my view, everything that we have. We look around this room right now. You tell me one thing that was created by government in this room. Every product, everything with this mic, this boom, this table, this glass, everything has come from entrepreneurship. And we need to nurture that to provide opportunities for everybody.
So that's where our CFO came from, isn't it?
It is.
Your want and perhaps even need to say there's a better way and I think I can help people.
Yeah.
So what do you guys actually do?
It's a great question because it's what is a CFO? And if we look at the traditional, what people think a CFO is versus what we think a CFO should be, they're often different. And so what our responsibility, if I can make it really succinct, and that is to give business owners confidence in their decisions. A lot of business owners run with gut feel.
Yep.
And gut feel is important. Intuition is important. And as businesses grow and they become more complex, we need to add the science into their intuition and run them side by side. So the way that we give business owners confidence in their decisions goes back to what we were talking about earlier: data completeness, integrity, timeliness, data design. That's where we start. So we get that right. And then having information that is actionable and consumable, that they understand. And that information encompasses both historical data and forecast data. And it's not just about the data. So data is the one thing, but then it's what is it that we do about that? What is the data telling us? And that goes back to the story. There's a couple of points that you made around the story that we give to data. And being able to think strategically and put ideas on the table. Now, I don't see our responsibility as having all the answers. I go back to the premise that if we want a better answer, we've got to ask a better question. And so we ask lots of questions. Have you thought about this? If you did that, have you talked to this person? This data is telling me this. I see the problem here. Are you focused on that issue? And how are you going to address that? What kind of support do you have around you? What kind of professionals can you tap into? What about your internal team? Have you got everybody on the same page to deal with those issues? And that's essentially what we do.
Incredibly valuable. And my observation is business owners, I don't think they're averse to making decisions, even hard decisions. They're quite good decision makers. They'll make a decision. What is probably most frustrating and keeps people awake at night is being blindsided.
Yeah.
Something happened, I didn't see that coming. And a really super simple common example is I got a $250,000 tax bill. I didn't see that coming. What the hell am I going to do with that? Whereas if the planning was in place and the data was complete and the conversations were being had, you would have seen that coming.
Yes.
You would have planned for it. It wouldn't have blindsided you, and you would have made some decisions, and the anxiety wouldn't be there, or it'd be lessened at the very least.
Yes. Yeah, that is very true. That is one of the primary motivations that I find when somebody engages us to help them. One of the comments that is often made is, I just don't want any surprises. Exactly what you're talking about. I am done with waking up on any given day and I get a letter from my accountant saying your tax is due, whatever. And it's like, I've got no time to prepare or deal with it or whatever. They're running, most entrepreneurs are time poor, and some things will slip through the cracks until it's at the 11th hour and they get a nice little bite on the backside and it kind of hurts, and then it's, what am I do now?
So it's the beginning of 2026, Greg. What would you say to people who own businesses right now that they could do or think about that would put them on more solid ground as they take off into the year?
Yeah.
What's your advice?
Well, if we're talking financially and around numbers, it's creating that forward view. If you don't have that forward view, that will make life very difficult for you. So just give some thought to what that forward view would do for you and your business and your confidence and your anxiety levels.
Beautiful. I love that advice because that's a beautiful segue into what I'm going to talk about next, not on this episode, which is the planning piece.
Yes. Planning.
Yeah. And it talks about the forward view in some great detail. And maybe they can come and see you. We'll put a link to your business in the bottom, won't we, Jeremy? He nods quietly. He's a man of very few words. Thanks for coming on, Greg, sharing your thoughts.
Thank you for having me. I really appreciate it. And I've enjoyed it. It's been great.
Yeah, it's a bit of fun, isn't it?
It is.
Yeah, thanks.